What's up, y'all? Today I want to go over the trades I took on Friday, the things I did right, the things I did wrong. I'm going to reflect on all of that right now, and I want to share with you the things that I learned. So before we get into the trades I took, I just want to go over what my bias was before the market opened, and it was overall pretty bullish. We had a liquidity sweep here, we broke structure here, and here this line is 9:30 open, okay? So because the order flow was so bullish, I was expecting price to keep going higher. But a few minutes after market open, instead of keep going up, we started going down. So that's when I realized we have a bearish SMT over here, meaning ES did not take this high while NQ took this high. And on the 1 minute, we just created a break of structure over here, confirming we have a change in order flow. So that's when I took a short here down on the 15 second after seeing this little SMT, and I targeted basically the most recent sell side liquidity. And if we see, price came down and hit my take profit. Now this is overall a pretty decent trade, but looking back, I feel like I should have left a runner to even potentially lower targets, because as you can see, this thing just kept going down and down and down for the rest of the day. Now the reason I only targeted this and not something like this is all because of this 1 minute model right here. This break of structure is only seen on the 1 minute. And if it's a 1 minute break of structure, then I target a 1 minute liquidity. And there's a very clear liquidity level over here. So that's the only place I targeted. Because look at the 5 minute, there is no structure. I cannot draw a break of structure line anywhere here because these are just continuous up moves. The nearest break of structure I can draw is over here where price kind of slowed down, but I shorted here, so it would be a long way to go before this break of structure would be confirmed. That's why I did not hold this trade that long. So on paper, I have a very logical reason for why I exited on this level and not anywhere else. But the fact that price kept going down after I exited proved my logic wrong. See, the way I think, the way my trading logic goes is that if we get a break of structure on the 1 minute, we only target a 1 minute low. And if we get a break of structure on the 5 minute, we target a 5 minute low. But remember that we shorted here before the break of structure happened. So at the time, I do not know that there's a break of structure, so I take my profits earlier. But I want to show you why I should not have closed my targets over here and target all of this instead. First of all, we have a big SMT here. Second of all, the 1 minute break of structure, which we talked about, once this becomes an actual break of structure, it confirms that this SMT is a valid SMT. So once this is a valid SMT and we have a break of structure over here, now this buy side that we just took, this becomes a liquidity sweep, okay? Now I want you to look at all of this. SMT, liquidity sweep, low time frame break of structure. That means there is so much more room to the downside, because now imagine a 15-minute SMT. That the 15-minute SMT would not stop over here. A 15-minute SMT would stop at a 15-minute significant high or low, like for example here, or maybe even here. Same thing with the 15-minute liquidity sweep. It would not stop here. A 15-minute liquidity sweep will play to its 15-minute model, which means the targets will be here, 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 potentially even here. So now you see that at this point in time, there was a lot of potential for price to pump down. So instead of taking advantage of all of this move, I decided to exit on this itsy bitsy little low here. It looks stupid, right? Because I am not following the model. Now this is where my big revelation hit me. I was simply too focused on lines. Because I only could draw a break of structure on the 1 minute, I only targeted the 1 minute low. But the market doesn't care about a break of structure line. Like, as traders, all of our lines and boxes and all of our indicators, the market does not care about that. The market only follows one thing, which is momentum. And at this point in time, the momentum started shifting downwards. And if we combine this shift in momentum with this high time frame liquidity sweep and this high time frame bearish SMT, now the target is much lower than this over here. Now the target becomes in scale with the high time frame model. Now the targets will be here, here. Now this is why experienced traders say the trend is your friend. At the end of the day, it is all down to the trend of the price. It's not about lines. The lines and boxes are only tools to measure the trend. It is only an approximation, right? This break of structure is only an approximation of the trend. Like, this doesn't automatically mean that price will go down, but we just estimate that if price goes below this line, okay, that is a significant amount of bearish momentum for us to say that, okay, it might continue going down until a certain point. It's the same thing with a fair value gap. Like, the market is not programmed to bounce down from a fair value gap. It is simply a measurement of a bearish move. Like, if we see a fair value gap, that means price is going down really fast for it to create a gap in the middle. The fair value gap, the box itself, has no magical powers. This is just how we measure the strength or the weakness of the price. So we should not be attached to certain lines or certain boxes. We should understand the narrative, the logic. So that's why on this trading day, I did not follow the logic of the price movement. I only followed the logic of the lines, which made me only small profits, and it made me miss out on way more profits simply because I followed the lines, not the logic of the price. So that's what I wanted to go over today. And I'll journal this in my head. I'll keep this in mind as I go into the next week. And hopefully we can actually put this idea into practice. See y'all later.